Welcome to the show today. Today we're going to be talking about how to start in real estate investing. Today we have Mr. Joe Killinger. He has been an active member in real estate investment for many, many years. Over the years, he has been an agent, an investor, a syndicator, a founder, and operator of companies as well as properties he invested in. He's currently helping others get started into real estate investing or becoming a commercial real estate agent. Let's give it up for Mr. Joe. How you doing there?
Good, good. Thank you. Thank you for having me.
Yes, yes. So, what do you think now today, what the state of the economy is for real estate? Do you think it's a good time to invest?
It depends on where you're at. There's some cities that there's a lot of people leaving, and so there's going to be some problems there. You're going to probably some banks will get some properties back, but it is going to create opportunity for investors that have bank connections to go in and acquire these assets at a good price. But there's places like Austin. We own property in Dallas. Um, you know, Florida. You're getting a lot of new population moving in there. So I was talking to an agent in Austin 2 days ago, or yesterday actually, and some of their prices on multifamily, it's incredible the prices are getting now, and there's more people moving in. These companies gravitate toward the talent, right? Well, tech talent right now looks like Austin is going to be the place to be. And I am a little concerned about their infrastructure. I don't know if they're ready for all the people that are moving there. I'm sure they are, but hopefully so. But then you talk to people in Florida. I talked to a couple real estate agents there over the weekend, and they said it's booming there. So just kind of depends on where you're at.
Oh yeah. So, what is a sweet spot for you when it comes to real estate investing? Would it be the state or would it be just the local economy? Like, what gives you the determination of where to go next?
We tend to look at right now. We're looking at some sale leasebacks on industrial assets. So we can go out to some of the outer cities. Just depends on the companies that are currently we're buying the property from, what that company looks like, how strong it is. So that's been a key place we're looking at in and around Texas, some of the outerlying areas. Some in Inland Empire in Los Angeles, and they got great access down to the port.
Mhm.
Just good companies with a good balance sheet that doesn't want to own real estate. They want to take that money and take the opportunity to grow their company. So we're finding some good deals there. Multifamily is, we're Texas and California, and you're seeing a big difference here. We're starting to see in Los Angeles some pretty good vacancies, and the concessions that are following are pretty strong. So, but you got to remember, Los Angeles, there's really no place to build a lot more. So we're usually the last ones into a recession and then one of the first ones to come out. But it really depends. There's so many variables right now, Brandy, because people aren't in their offices. People aren't in their retail, essentially. How many of those people are actually, 3-4 months from now, where are they going to be? So there's a lot of variables. If you're going to be starting to investing in real estate right now, you better double up your due diligence. You better know, everything about that asset and about that area. If it's a great asset, but everything else in the area is closed, there could be problems. So really get to know your market. Call your councilman, call the Chamber of Commerce. What's going on? Really, really find out everything you can. Talk to the neighboring properties.
Right, absolutely. So you're saying that thorough due diligence is key.
It is. You don't want to. If it looks like a great deal, you better find out why.
Why?
Now,
Yeah.
yeah, why is it such a good deal? As everybody, we bought a property at one time in 2008 and 2009 actually, and it was like 2 days after the stock market closed. Just bottomed out, and within 6 months, everybody around. This is a 390 some unit apartment building in Texas, and everybody around us within 6 months was in foreclosure. And
Wow.
all of a sudden the crime started moving in. Nobody wanted to live in that area. So we really struggled for some time. That was an expensive lesson, but we learned it. And so I just tell people that you need to know what's going on in your community. Know what, the local politicians are out there all the time trying to bring new businesses in. What business are they bringing in? And so do you need more office? Are you going to need more office? Are you going to need more retail? How can you take a current asset and reuse it?
Correct.
If you can turn some office into some apartments, if that's needed, or retail into some storage, you got to take a look at all those avenues.
Cool. So we're going to back up a little bit and we're going to
Yep.
try to get a little bit of history. What
Yeah.
made you decide to enter into real estate?
I grew up in Nebraska,
Mhm.
and my father was a real estate or an auctioneer. He did some real estate. He worked in a sale barn selling pigs and horse and cattle and everything else. But the real estate side of it really caught my eye. And so I really saw him do. I didn't care so much about the auction side. I didn't think I could talk fast enough, but um, I really enjoyed the real estate side of it. So I ended up going down to the University of Nebraska, and I decided to get licensed. And it was one of those stories where they come in, and you've seen it several times. The owner of the company said, "Yeah, I'll bring you on. You're just going to do cold calling." He comes in and throws the phone book in front of you. He goes, "There's your new clients." And I focused on farm communities, is really because that's what I knew. And I just
Okay.
started cold calling, and then I moved to Los Angeles and just decided, or to California actually, and decided to get my license here,
Okay.
and then just pursued real estate and investing. I started buying homes and flipping them, and that went pretty well. But I knew that wasn't going to be a long-term business for me. And now we own Commercial Brokers International in Los Angeles. We're a full-service brokerage. We're 12 agents, probably going to take it up to like 14 or 15, and we're starting to look at doing deals around the country.
Oh, wow. That's awesome. So now,
Yeah.
do your brokerage firm only specialize in commercial real estate?
Yeah, that's all we do is commercial. We're full service, office, retail. We've done investment deals in 32 states, so and that's expanding. We're currently getting licensed in other states. We're going to open offices in other locations as well. That's
Okay.
really been our focus. We had a property management division when the pandemic started.
Yeah.
We ended up selling that off because I could see what was coming. I'm like, oh, this is going to be a battle. And so we sold it off, and that's done. That other company's done very well with it. And we had a tech company. The RRD was a tenant screening company. A few years ago, we sold that off. Did well with that as well. So every investment in any company we do is real estate oriented.
Okay. Okay. So why should you start investing into real estate? Why would one want to get into real estate investing?
If you look at the wealth, most of the wealthy people in this country, a lot of it's been generated through real estate. If you can buy and hold or buy and
Yes.
flip, it's just a great way. Stock market, very risky. It's really, and I'm in the stock market too, but I have a guy that handles that for me because honestly, I don't understand it enough to
Right.
really get into it. Real estate is my thing. And I think you're going to find that in 2021, there's going to be some great opportunities to be buying deals directly. There's going to be some distressed assets out there. You're going to
Oh,
be able
yeah.
to buy them from property owners. You're going to be able to buy them from banks. You're going to be able to eat. You're going to even be able to go and invest in companies that are have real estate, and you can really help them grow their business. I think going forward for the next several years, there's going to be a lot of opportunity in real estate. I think it's a prime time to get started. And I just think if you're going to get started in real estate and it's something you want to pursue, then you need to go out and find a mentor. And you find that mentor that is
Yeah.
doing exactly what you want to do, and then bring value to them. If they're my age or older and they don't really have a lot of tech capability or knowledge, and say, listen, I'm going to do all this for you for free. In turn, I want you to teach me how to do this business. So don't just reach out to them and say, hey, I'd like you to teach me how to be a real estate investor. Bring value. We tell our
Right.
agents, we tell them to do that. Everything you're doing, build your community, bring value in everything you're doing in this business.
Wow.
So
Oh,
it
yeah.
works.
So if one goes out to try to find or locate a mentor, what is, I guess, a good way for a beginner to get started into real estate investing? Let's say they found the right mentor. What
Mhm.
will be one of the first things they should look for in real estate investing? Should they go big or should they go something that they're
No,
comfortable with? What is it?
something, yeah, you don't want to go big because, that means more, there's just more money is out.
Mhm.
I like to see people start smaller. Now, unless you're going to invest in that mentor, that's a great way to do it. Maybe you
Okay.
bring enough value to say, listen, I will dig that ditch. I will do that. I will save you that money, but instead of paying me an hourly wage, keep that money and throw it into the investment.
Okay.
Be a finder for them. Go out and find deals for them. Say, listen, I'll go out and find deals for you as long as I can, instead of taking that money, can we just throw it into the deal instead of me taking it?
That's a
Get
good way.
creative. Yeah, get creative. Be willing to do the work though, because if you've got a successful investor, there's a lot of people trying to do the same thing. So you've got to bring value to that person. You got to make it worth their while to teach you. And there's going to be people that say, no, 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 I'm just going to pay you. But there's going to be a good number of people who are going to see the value in what you're doing, and they're going to offer you a piece of it, because it's just, there's a lot of value. You're bringing so much value that they're going to want to keep working with you.
That's good. I never actually heard that concept before by
Yeah.
bringing value to your mentor, which makes a great relationship because it seems
Yeah.
like there is literally a synergetic relationship where you
Yeah.
guys are really both benefiting from the relationship.
Yeah. You're not just taking from the knowledge of this person, you're learning from them. And there's a lot of great people. I mean, you're going to run, we all know in our business, well, in any business, there are people out there that maybe you don't want to mentor with, but most of them are good people that want to see you succeed. And
Right.
you got to bring a good, positive attitude and work ethic. And you can do it in this business. Brandy, our business is not that difficult. It's very cookie cutter.
Right.
Once you've learned it, you can kind of adjust it for the area. And so we're not brain surgeon. We can kind of do whatever it takes. There's no surprises. So
So, question: Can anyone begin real estate investing with no money?
you know, I get that quite often. And, it's, how are you going to get a loan? I
Yeah.
mean, getting somebody with not having any skin in the game is very, very difficult. So maybe you can, but do you want to go that route? I mean, because if somebody else is giving you money, your chance, you say, I'm done. I didn't do this right. I'm done. Well, they're left holding the bag. And,
Right.
you know, no money down can be hard to do.
Right.
But if you're
But
going to
we
put
see it all the
sweat equity
time.
into it,
We
yeah,
see all the time with these advertisings and get into real estate with no money out of your pocket, no using your credit. Like,
yeah.
are these things that we should look for and not get into, or do more due diligence on those particular individuals that give us these tips?
Always, if they're trying, I have a website. It's my name, joekillinger.co, not
Hmm.
.com, joekillinger.co. And it is designed exactly for what these people are trying to do, is really for free. And we're big on giving back to our real estate community. So we've got a YouTube channel. You'll see it on the website as well. The YouTube channel, we put a video out every week, and it's really to try, and we're not selling, it's free. We're not selling anything. We don't want anything
Right.
other than our thought process to put good content out. Sometimes, honestly, sometimes it's good, sometimes it's okay, we probably could have done better, but somebody will learn from it. But our thought process, we put that content out there for people to learn, and it's for free. All boats rising, right? We're putting it out there and trying
Hmm.
to help. They'll bring good investors into the business, and really help drive the business. So, but to go back to the in with no money down, really watch at these players are putting that out. You're probably buying the audio tape, the book, the something, and the
Right.
chances of that actually working for you are pretty slim. You're better off if you don't have the money and you do want to invest, and you find somebody that does have an asset for sale, sweat equity, and you don't get anything unless you put the work in.
Right.
And if you're willing to do that, if you have the time to do that, you know, maybe
Yeah.
maybe that's some way.
So do you believe that the sweat equity way is actually a good proven way to get into real estate? 'Cause let's say, for instance, you have a mentor and you find a deal like you were saying previously, and you out there, you find a deal, you put the work in, and the mentor said, okay, I'll give you some sweat equity. I'll give you 5%, 10% in the deal. And then that way they can accumulate a little bit of wealth within that deal and then take that money or whatever have you and try to go and do another property on their own. Would that be the kind of like the approach that you're
If you
thinking?
can get that deal, then, you as a person put in the sweat equity, great. You're going to learn so much from doing that, and you're going to learn so much from that person. But keep in mind, you're going to want to have a contract that, I'm going to do all this work.
Right.
And if you do all that work and you don't have a contract, and you go, you know what, that wasn't good enough work, I'm done.
Right.
How do you gauge it? I mean, how do you really gauge it? I mean, if you can get those deals and you're willing to take that chance, I'm all for it. But just understand there is risk. There's risk in all of this investment.
Right. Would you say that real estate investment is a little bit more riskier than investing into stocks, or equally the same?
Depending on what you're doing. If you're buying and flipping, I've done that, and I tell you, I got so damn lucky. I just thank God every day. But there's risk there. There's a lot of risk there because, that's more so not really investing. It's you're guessing the market's going to stay there. So it's very risky. But if you're buying for long-term assets to hold, less risky than the stock market, I believe.
Okay.
Less volatility.
Okay. So, and would you say that only because you actually have, unlike stock market, where you have, it's really just liquid of money just changing back and forth based on pricing, etc. Would you say that real estate is a little bit less riskier because you actually have a actual asset on the books that can be at any given time can be sold off, even if you lost money in the transaction, there's a possibility to get some of that money back?
Well, in the stock market, it can just take some gossip and it dives. Maybe not for how long, but you don't know when it's going to come back. You don't really see that in real estate. It's just, I like the less volatility. There's less reasons. And if you do your due diligence in the beginning and you've checked, what's going on in the community, what's going on in whatever asset class you're looking at, I think that you can eliminate a lot of that risk. Stocks, I look at some stock. I mean, how the heck is Tesla worth more than on all these other companies combined? And you wonder, right? So yeah, I'm just a really bullish on real estate. But yeah.
Okay. Last question here. What do you think about REITs?
Oh, it's a great point. That's what I started to get into that now. See the gray hair? It slips every once in a while. REITs, if you're a beginning investor, a real estate investment trust is a good place to really get started because you can do it for a few $100s, right? You can buy a stock, hold on to it, start getting the paperwork and start really understanding how it works. And then eventually you might want to do syndication, start pulling other people's money in and really start doing it. And that's a very good place to really learn how it works. If you're that kind of person, I'm very hands-on. I can sit and read a book and, it doesn't do me a whole lot of good, but I have to just go do it. And sometimes that's worked, sometimes it hasn't, but, I'm really hands-on. But yeah, that's a great way to start because you can start reading all the documents that are coming to you as you're investing.
Oh, that's awesome. I had to throw that one in there because I that's how I kind of started.
Is it?
In real estate investing, and then I ended up eventually working for a real estate developer. Many years ago. Matter of fact, it was a few years right before the crash of 2008.
Oh,
yeah.
Wow. So you got to see the highs and the lows, huh?
Oh yeah. This is when there was closing loans same day.
Oh yeah.
Yeah, right. Countrywide and all those places. So I remember quite well.
Yeah. I've been through. This is probably my third downturn, and so I used to do real estate auctions for a large company out here. Actually, we started the company, and it became the second largest real estate auction company in the Western region. And man, if I could have bought those, I couldn't buy because of conflict of interest, but the numbers. But I don't. In this situation, I don't think we're going to see that, where we're at now, the pandemic, because so many banks are working with the property owners. Some of the big firms, I heard the JP Morgan Chase was converting a lot of their debt in these companies to equity to help them grow. Maybe they'll convert them back to debt down the road. I don't know what they'll do down the road, but yeah, I mean, it really, there's been support. And so I hope that You know, again, I was reading that, so take that for what it's worth. It
Oh,
wasn't
wow.
anything I personally did, but if people are actually doing that, then that's going to keep a lot of these assets from actually coming onto the market.
Wow. Lastly, though, this is a follow-up question because I didn't read that, and that would be a great idea. Do you think that that should be another alternative approach for investors or bankers, if you will, to start having like a mixed kind of investment, like where it's not heavily on debt, but it's a little bit of equity into the deal as well, and maybe debt? Or you think they should stay out of the business of just doing that altogether?
That is such a cart and horse. I mean, it really, it's a different animal. So I don't know that. Yeah, it's something that somebody should take a look at. I don't know how you honestly don't know how you'd make it really work, but it's definitely worth taking a look at.
Oh yeah, absolutely. So tell us, where can we find you? You did drop your YouTube a little
Yep.
earlier. Give us
Yeah,
a little bit
well,
more of
it's a
that
website.
information.
The YouTube channel is on there. The YouTube channel is way too long, so I can't. But you can go on to the joekillinger.co. If you want to call me directly, feel free, 310-943-8542. If you have any questions about real estate, I'm on Instagram at Joe Killinger,
Mhm.
and LinkedIn, same thing, Facebook, even on TikTok. So I
Wow.
don't do that right, but you know, that one's an interesting one.
Oh yeah. I'm still not even on TikTok. I'm still going to try to figure out how to work that. But
Yeah.
thank you for bringing your insight on real estate investing today on our show. It was a pleasure having you on.
No, thanks for having me, Brandon.
All
Appreciate
right.
it.
So thank you guys for joining us, and join us next time on Influencers Blueprint.